Hello everyone, this is Max. You're watching EquityMatch online live pitch event. Today we have another four great funders and unbelievable investor guests. So before moving to our four funders, let me introduce you Daniel Wood, which is our investor guest. Daniel, thank you so much for coming, and if you want to give an intro to yourself, thank you.
Thank you so much. I appreciate you. I'm excited to be here, hear from these amazing founders. Looks like they got some really exciting things for us. I run the company, the Swedish Wealth Institute. We do events and with entrepreneurs from all over the world. So we work with absolutely amazing speakers, and our mission is to connect our clients who are entrepreneurs, investors with the right mentor at the right time for them to be able to live their mission. So with a little luck, we'll connect some of these amazing entrepreneurs with the right partners, and we'll see what we end up with.
Thank you so much, Daniel. So let's move to them. I'm calling our first founder, which is Miranda Mashesvi, founder and CEO of Headquarters in Atlanta, Georgia, gaming edtech pre-seed of $500,000 USD. How's it going, Miranda?
Great, thank you. Hello, everyone. Happy to be
Thank
here.
you for coming. I think there is some noise on the background. I hope we can listen to you. Miranda, if you want to give an introduction to yourself, and after you can go straight to pitch. Thank you.
Okay. Hello, everyone. To have to present little bit about me. I'm currently in a chaotic situation because I'm participating in some really interesting show. So without further ado, hello, I'm Miranda, founder and CEO of Virtual Story Startup, and we're here to revolutionize storytelling for future generations. Let's be honest, today every kid grows up on the screens, and most of the screen time is wasted on mindless entertainment, which is quite damaging for cognitive abilities. Parents know it, teachers know it, everyone is worrying about it, but there's no much solutions which can make kids love studying or reading by themselves. As a result, more than 400 million children worldwide are having lots of cognitive and literacy problems. That's why we created Virtual Story Startup, because the real problem is that screens are fighting. And I want to highlight that we are not fighting screens, we are making screen time more interactive, educational, and entertaining. Our choice-based system allows kids to just watch and listen to stories or educational content, but also participate in them and make impactful decisions on the story, which allows for more engagement and development of creativity, critical thinking, reading comprehension, and focusing. Our target market is quite large, with 150 billion TAM, and we're targeting mostly parents of elementary students and publishing houses and educational companies. Our model is B2B2C. Currently, we are more targeting B2B companies, and our next step is to create a Netflix-like platform for subscribers and providers. Our method is quite unique. We are selling our QR code, which leads to the interactive book. Together with physical products, this also allows for publishing companies to promote their product more effectively to new audiences, as publishing companies' sales, especially for children's sectors, are in drastical historical low in sales. We also have programs which allows kids to create their own stories and publish it in form of digital and physical book. Competition is pretty high, however, we are targeting more niche sector. Our unique value proposition is that we are not trying to replace books with digital content, but the opposite, we are trying to use screens as destination to books. Our biggest competitors are platforms which take children's attention the most. However, Virtual Story is safe and also highlights cultural heritage and educational interaction. So far, we have validated MVP. We have early sales of both on B2B and B2C markets. However, as I said, we are focusing more on B2B. We are already on the US market, and currently we just entered German market, collaborating with the government. Also, we have won several competitions, and we have participated in many exhibitions for startups. Currently, I'm also a part of international competition. Our team has experience, and it's a great combination of technical and creative people. My background is in filmmaking. Vaja, my co-founder, is illustrator with many years of experience, and we also have a programming and marketing team with us. We're also backed by professional psychologists and educators in order to make sure our content is safe and educational for kids. And we have experience of working together for many years. We have done many different kind of projects. So our team is like really dream team, I would say. And currently we are raising pre-seed 500,000, and our aim is to enter systematically in the schools and provide them with contracts and pilots with different schools. And currently we are negotiating also with Georgian kindergarten ecosystem, which will be live from September. And also we are trying same strategy to US market and German market as well. And for next steps, we want to first of all explore more US markets. That's our target. However, our final plan is to make it a global product, of course. Thank you for your attention, and join us in shaping the future of storytelling.
Thank you so much, Miranda. I leave everything to Daniel.
Thank you. So Miranda, thank you so much. That looks really exciting. As a parent, I definitely see the importance of it. What is the valuation you've set for this investment?
So it's 2.5 million for 18 to 24 months. And currently we like our target, which was over up to 50,000 users. So up to 75% of them became paying users. This was during B2C MVP validation, so it was not even a final product yet. We have developed our product much better, and currently we are also working on AI integration, which is going to be kind of different from our competitors' AI integration. It will be very carefully monitored, so children get maximum cognitive development out of it.
Right. Okay. So the pre-money valuation is 2.5 million.
Yes.
Yeah. And how many paying users did you say you had?
So currently we have more than B2C was one time sales, so it was somewhere between 5,000 and 7,000, but we are targeting B2B at this stage, because B2C users appear during MVP validation, which was testing stage, but our end goal is also going to be B2C. But currently we need more material, we need more content in order to fully integrate B2C. That's why we are currently focusing on B2B users. We have up to 8 B2B clients from Georgian, German, and US companies, and we're currently working on pilot projects, and one is long term.
Nice. So how much is your current revenue?
Current revenue is, to be honest, shaky. It's not stable yet, but it's more than 25,000. We're still waiting for confirmation and payment from German institution, which is going to be a longer project. It's going to take up to 3 months, and share is going to be we're going to share the equity.
So 25,000, is that per month, or is that the total so far?
It's total. So we started our sales not a while ago, and it was not stable. For example, we sold 2 months straight, and there was pause for 2 months. It was during a difficult situation in Georgia. It was basically not possible to do anything like that. So we have this pause, and right now we are more focusing B2B because at this stage it's more stable for us.
Yeah, that makes perfect sense. How much have you and the other founders, how much have you invested into the company?
We investors not much because we got quite a lot of grants from competitions and hackathons, which amounted up to, if I'm not mistaken, 11,000. And when we started to sell, we invested everything back. We did not get salaries yet as a revenue, but I'm sure the moment sometime we invested also our money, but it's not like so big, so it's
Right.
to
So
be
you've had
considered.
some money come in and then you've invested your time into it.
Yes.
Okay.
On
And so
an idea stage.
So what will
Sorry.
be the average value per client when you start getting these subscriptions?
So when we made our own prototype and sold the price per unit, it was from somewhere from $15 to $35, depending on the content. But
Is that per month?
per product.
Per product, okay.
But in case of B2B, it's going to be different because we're gonna have subscription with them and gonna share revenue, which is still I don't have fixed numbers yet because we're still working on these projects. But customer acquisition is not so high, especially on Georgian market. It was pretty easy for us, but we did invest some money into marketing, online marketing as well.
Okay. And do you have an idea of what lifetime value per client will be?
If we do B2B2C, it's going to be dependent on what kind of B2B partnership we have. For example, right now we are collaborating with biggest Georgian publishing company for kids, and it's really at this stage is really nice for us because we don't really have to reach out to customers because that company is already very popular. But if we would just do B2C, it will be real complicated because we do have physical product together with digital one, and we do have just digital selling online. However, our special appeal is to sell together with the physical book because that's what our target audience values most, to product to be tangible as well. So it
And
would be
what's the planned exit for the company?
It will be to get attention of big publishing company, hopefully Amazon or something like, or Disney, I don't know, and merge our product with them because our product is not just something that is printed and it comes with QR code. It's also its biggest value is how the content is, the storytelling inside, and how it's connected to educational and cognitive development. So with fine copyright, etc. I think that would be one of the greatest exit we can get. But if exit is not an option, we will continue to build, of course.
So do you have a plan for doing multiple rounds of finance and then an exit? Is there a timeline and exit price?
Ideally from 3 to 5 years.
3 to 5 years. And what would be the exit valuation you'd expect?
I would love to become a unicorn.
Yeah.
First. Yes.
Yeah. So ideally,
I think it's possible.
$1 billion
exit. I think it's possible because we are not just ESSEC. We are basically gaming industry, more connected to gaming industry and entertainment, and gaming industry is much bigger and much broad. So we are not just doing for something for schools, but it's something that every family can enjoy and every family can have.
Daniel, I had to walk in because we have run out of time.
Thank you so much.
Thank you, Miranda. I appreciate you.
Thank you. Let me move to our second funder, Daniel Vagido, founder and CEO of Blend Energy Ltd, headquarters in Limassol, Cyprus. Deep tech and clean tech is the sector, around 3.5 million in euros. How's it going, Daniel? You're muted.
Hello, Max. How are you doing?
Oh, good. Thank you so much, Daniel. If you want to give a short intro to yourself, you can go straight to pitch, and after Daniel will come to you.
Oh, okay, then. Hello there, everyone. So my name is Daniel, and I'm a chemical engineer. And today I'll be representing Blend Energy. So Blend Energy took on the gigantic task of tackling the plastic, the waste challenge, which is a global challenge that we are all well aware of. Now, to put some perspective, there's about 400 million tons a year of plastics being produced all over the world, and less than 10% is being recycled, and billions of euros, dollars of pressure to get this solved. Now, as mentioned, I'm a chemical engineer. I came from the oil and gas industry, and I looked at real feedstock, plastic waste, and I decided I'd create a solution that could handle real world plastics. Now, it had to be energetically self-sufficient, circular, and continuously operated. To give you a brief how it works, is the technology is called Polyflex. We prepare the feedstock, we shred it, we feed it to a pre-melter module, then it goes into a reactor, and then it goes through a distillation process, and then there's gas recovery. The gas recovery allows it to be self-sufficient. Now, the unit economics are very important. There's an ROI of 1.6 years. The unit price or package, I should say, is 1.5 million euros, and it can operate with good maintenance for up to 20 years. The market for this solution is huge. Now we are targeting the low-hanging fruit, which is the European and UK market. We already have a commercial unit live, and we have demonstrated to many prospects, and we already have the first sale on the line, and we'll be sending it to Scandinavia. Now, some competitive positioning, we're one of the few modular mid-scale system, so we fit in neatly compared to big, huge capex projects. We don't need big capex to get started. We can take less demanding feedstock and deliver good value. Today we're focusing on unit sales, service level agreement, and in the future we'll do the licensing of the technology. We have very clear path and roadmap, and within the next 5 years, we are aiming to attain of a billion plus market value for Blend Energy. We've already certified our technology to some of the most stringent regulation in the European Union. The ask from us today is 3.5 million euros We'll use it to expand manufacturing, then to expand our personnel and team, and improve the technology further, and have working capital. Thank you for listening, and I'll take the questions.
Thank you, Daniel. All the questions are left to Daniel.
Thank you. Yes. So Daniel, what is the current valuation you've set for the company?
35 million euros.
35 million. Is that pre-money or post-money?
Pre-money.
Pre-money. Okay. And you said the goal is to get to a $1 billion valuation in how long?
Within the next 5 years, 2030.
Next 5 years? Yeah. Are there more rounds planned on that journey?
I don't want to.
Yeah.
But we will use it strategic.
Yeah. If you need to, you'll open up for another round.
Exactly.
Yeah. And what does the exit look like there when you hit the $1 billion?
We have a few options. First option, it is to go public. We would love to go on the NYC or NASDAQ at $1 billion plus evaluation, or get bought up by a bigger player, i.e. Exxon's, Shell's, or any other big player.
Right. And where do you see your exit in that? Would you sell and leave the company, or would you want to keep running the business after the exit?
I'll be honest, I have very ambitious vision for Blend Energy. And we also have some additional technology. I have a plan for the next 20 years.
Right. So you'd want to continue even after a potential public offering?
Yes.
Yeah. Okay. Very cool. And so for you, why do you want to do this round rather than, now that you've already have a sale, why not self-fund it? Why do you want to do another round?
Sales cycles are very long initially. After the first reference, it'll be much easier. But to give us backup, it's good to have around. We may not actually need it.
Yeah. Better to have a war chest than to be left without.
Exactly.
Yeah. All right. And so what do you see as the biggest risks for the company going forward?
Safety is the biggest risk, and also quality of the product, which is the oil.
Yeah.
If you don't have good safety record, it can destroy your reputation. And same with the product quality.
Right. And so what are you guys doing to make sure that this doesn't happen?
First of all, we have a lot of hands-on experience. We have safety inspection and certificate and engineering. Nice. Safety is at the core of our design.
So how does it look with competitors? Is there anyone on the horizon who threatens to come in and take market share?
I'm always on the lookout, but everyone seems to go down the route of big centralized facilities, and it doesn't directly compete with us.
Right. And why is the mid-size modular model, why do you consider that better?
It's decentralized.
Yeah.
Instead of bringing the plastic to the location, you bring the solution to the plastic.
Right. So you're saving all the travel costs and distances.
Exactly.
Right. How does that stack up financially for, so to speak, the end user? do they, like, what is the difference for them cost-wise?
Well, they take an operating cost and turning into a revenue.
Right.
Profit.
And compared to one of these big centralized ones, how do yours make them more profitable?
Lower capex, meaning less risk.
Yeah.
Faster to deploy, faster to permit, and we can handle a much wider variety of feedstock.
Right. And so who's your ideal investor in this round? What are you, like, if you could dream of who you want to come in here, what does that investor look like?
Somebody that can help us penetrate the market
Right.
deeply and quickly.
Right. So ideally someone that not only can give you the money, but can open doors for deals and closes.
Exactly.
And how does your sales process look right now? Who do you have in your team that is opening these doors currently?
Good questions. So we have a business development person. We build leads together. We contact them. We set up meeting with whoever is interested, and we give them a tour of our facility.
Right.
So no PowerPoint. We actually show them the live machine.
Right. And what have you seen as the interest in the market? Is this something that has been received well, so to speak?
Yes, but with caution. The market needs as many references as possible, and we have one on the way.
Right. Yeah, because I can imagine with something this big, something this expensive, the biggest challenge is to get someone to believe. Do you have financing options for them or risk guarantees? Do you do anything to lessen their risk profile?
In their service level agreement, we allow the customer to provide their feedstock composition. And based on that, we can provide minimum guaranteed oil production.
Right. Would you be able to, for example, lease plants as well, or lease units rather than having them be bought outright? Would that make it easier?
Once we have the cash flow and CO production, we could do it. Yeah,
because considering the ROI you have on the machines, that might turn it into a recurring revenue stream rather than a one-time purchase and sale, so to speak.
I agree. Yeah. And we do have it on the map.
Yeah, I can imagine. All right. So, Mas, that was all my questions. I appreciate you, Daniel. Thank you.
Cheers.
Thank you so much, Daniel. And thank you so much, Daniel. Let me move to funder number 3. Mark Francis, CEO of Preferred, headquarters Hong Kong, China, AI, HR tech, a seed of 2.2 million in USD. How's it going, Mark?
Yeah, doing very well. Glad to be on this call from Hong Kong. Let me start the pitch now. Good to meet you, Daniel.
Right back at you.
Cool. So yeah, I'm Mark Francis, based in Hong Kong, and I'm the CEO for Preferred. Preferred is looking to upend a broken recruitment market, and we see ourselves as the future of talent acquisition. The recruitment market is a huge industry. Last forecast were at $700 billion, cumulative annual growth rate of about 8% per year. Now, what we're doing is we're combining AI, as many other HR tech startups are trying to do, but the critical thing for us is we're putting in place a human circuit breaker, which is in essence verified human referrals aligned with AI. What this does is it helps us to break away from these AI-only solutions, and it also creates a secondary income stream for individuals, many of whom are actually looking for that right now. For the employers, of course, it saves them a lot of time and money. And obviously, the one thing that if anybody on this call has been involved in hiring as a job seeker or an employer, that they would have noticed in the last 2 to 3 years is the phenomenon of AI-generated AI-generated CVs applying to AI-generated job descriptions via AI agents. Applications are up about 300 to 400% per application. So it's creating a bottleneck. There are too many applications coming through. The issue is now, how do you identify which individuals to speak to in a world where everybody is gaming the system by putting their CVs through these tools to try and bypass the AI scoring mechanisms? And that's basically where we come in. So of course, as I mentioned, we are AI native and we are using these tools, but we also bring humans back into the loop. This means that we can crowdsource talent and access the network effects that they have. But critically, it also means that we're getting an automated human testimonial for an individual. So the main tech that we're using is obviously AI, but this is aligned with blockchain and gamification, and I'll explain that how. So we're already using AI for the scoring of an individual, not just the CV, but their cover letter and other alternative data points. So we're looking for signals to understand who is a person, what is their skills, experience, and projects. And we're actually building AI agents now to actually communicate with those job seekers to access more information that can become more signals. We add to that blockchain, and we're using that as a public ledger for referrals, so we can track referrals, so they're trustless and immutable. And we're also using it for chain of provenance to try and understand, is this person real? Is this a real profile? Can this information be trusted? And then why this information should be prioritized. These are the two main things that are actually breaking down in hiring right now. And of course, the gamification angle is so that we can keep individuals engaged with our app. We have a pretty detailed AI roadmap. We've already actually done stages 1 and 2, and we're actually now building stage 3, as I mentioned, which is the agentic AI notifications. But we're looking to have a fully agentic system by the end of this year. So it's very straightforward. Individuals can post jobs. We can pass a PDF. We can help pre-populate the information. We have our own score that we built in-house. We have applications and referrals that come in. We look at alternative data points that we scrape, and then we have this ledger for referrals as well as for credentials. And we're looking to address this for a number of different users. Obviously, employers is where our revenue comes from. It's a B2B revenue model currently. But of course, we're also trying to provide a better service and experience for job seekers. Many people are frustrated. You apply and it falls into a black hole. And of course, for these referrers, we're creating this new income stream, and we're using their compound network effects to tap into their friends, family, and colleague networks. Myself, I'm a serial entrepreneur. I have had 1 exit under my belt. I spent the last 8 years building a fintech company in Asia called Zettle that's made over $1 billion in loans to companies across Hong Kong, Singapore, and Malaysia. 2 of my co-founders, Carl and Jonathan, come with a number of years of recruitment experience and Web3 experience. And if you look at our team, you'll see it's a very diversified team by age, sex, and demographics, intentionally, because we want to get away from hiring biases you see on a lot of other apps. We actually already have a term sheet from Animoca Brands, which is a Web3 investor out of Hong Kong. We're part of programs with NVIDIA, everyone will know NVIDIA, Hong Kong Science Park, an accelerator program in Hong Kong, Brink, an accelerator program in the Middle East, and we actually have just been offered a check by Level Up Ventures, a US-based VC. As I mentioned, we have a B2B revenue model currently, primarily from job listings and placement fees. We're actually looking to upsell these customers onto a SaaS bundle, which gives us nice, sticky, monthly recurring revenue as well. Actually, out of this list, we do compete with recruitment agencies and jobs boards. The one you probably all know is Mercor. They're also in this space. They got a $10 billion valuation at the end of last year. But a lot of people are looking to obviously address this, but few are doing this in Asia and few are using the tools that we're using. So over the next 18 months, we're looking to get towards 500,000 users. We're currently raising $2.2 million to get us to $8.8 million in revenue. Thank you very much for your time, and look forward to your questions, Daniel.
Thank you so much, Mark. Daniel's coming.
Yeah, thank you so much, Mark. I'm very curious about this. My first job was in the recruitment field, and I was there for 10 years. So
nice.
I first want to understand how do you see getting 500,000 users on the app? What's the USP for the user?
Yeah, good question. So with the investment from Animoca, part of the reason that we selected them is they have another portfolio company called Open Campus, which is putting graduates' credentials on chain. It's giving them what's called a soulbound NFT, which is a non-transferable NFT record of, in essence, their degree, their diploma. So they've already started to partner with universities across Asia. They've started with India and Vietnam, and they're looking into the Philippines next. So with that partnership alone, we've actually got the potential to get up to, well, there will be up to 50 million job seekers who will be having this particular on-chain credential. We don't expect all of them to convert immediately, which is why we haven't put that as the number, but that's why we're quite confident we can get to these figures. The partnership with India is actually going live on Friday. So we're very excited by what that's going to bring. And of course, they are then going to partner with more and more universities across the region and world to get these credentials on chain. These job seekers become the job seekers for our platform. So that's how we're going to hit those numbers quickly.
Right. Yeah, that sounds good with the distribution side. I'm just thinking now, if I was the user, why do I register on your app?
Yeah, good question. So look, jobs boards have obviously been around. You would have used them plenty of times as a recruiter. The key thing is with agentic AI, you can do so much more now than you could even a couple of years ago. The level of interaction that you can get for a job seeker is a much deeper relationship. It's in essence what a recruiter would provide to a good candidate. You're constantly staying in touch with them, throughout their career. Every time there's a promotion, a pay rise, they get a new qualification, they normally would update you about that. And so you keep these individuals in mind. And as there's roles that come and present themselves, you can obviously submit them to them. What we're basically doing is trying to create this in a sort of mostly automated process so that we can obviously do this at scale with more individuals. It's not exactly the same level of services you might get, but it's a pretty good level of service and much better than they would be getting than no interaction with any particular recruiter. So that's the idea, is to give people a much better experience on the app. That's for the job seekers. For the referrers, as I mentioned, many of these referrers are actually going to be job seekers, and some of them are actually going to be recruiters or potentially out of work recruiters too. And so they're going to be using the app to access secondary income streams. So we basically will pay away up to half of the success fee that we're charging the employers to the referrers in the network. And so that's how we basically tap into a much larger compound network effects.
Right. Do you integrate with LinkedIn to make it easy for people to upload their CVs, or how does that side work?
Yeah, so look, we can obviously capture the information from LinkedIn, so the information can be pre-populated. But LinkedIn has been tightening up their APIs recently, so I don't know how much longer they're going to allow that for, is the truth. Look, we all use LinkedIn, but I think a lot of people are a little bit fed up with LinkedIn as well. There was a recent study that came out that there's 100 million fake profiles on LinkedIn. So it's almost 1 in 10 profiles are fake. So we're starting to see problems that you see.
Well, and as a job
lot of
seeker,
other apps as well.
LinkedIn's never really worked brilliantly anyway. So I
Exactly.
definitely get that looking for different. But we all have our profile on LinkedIn. So if it's easy to populate, that makes it so much easier. So what's the exit at the end? Where are you taking this to?
Yeah, so actually one of my advisors previously sold his business to a company called Recruit Holdings, which is the largest recruitment company in Japan. They are a listed business, and they typically look to acquire companies between the $1 to $300 million mark. So the plan is to build this business and scale it over the next probably 4 to 5 years. And then obviously there is always the route of the IPO, but that's a difficult and fraught route to take. I think more than likely we would be acquired by a larger competitor as a strategic investment. Recruit Holdings is the one we're kind of looking at, and that's why I've brought this particular individual into the business.
Right. And what's the current valuation you're looking at?
8.8 million pre-money.
Pre-money. So 11 million post-money.
Correct.
And the idea would be to scale it in the next 4 to 5 years to somewhere between 100 and 300.
I think that's probably likely. Obviously, we might exceed those expectations, but I think that's likely.
Well, I mean, every entrepreneur hopes that, yeah.
Exactly. Everyone wants $1 billion company, right? I think realistically, 1 to 300 with that particular exit is something that we think is quite feasible.
And what has to happen for you to hit that exit number?
Yeah, I think, look, the key thing is, we haven't targeted any enterprises, right? We just set up the company last April. MVP was live in November. Revenue started in January. So we've been initially working with SMEs and smaller firms because the truth is the sales cycle is quick. You go directly to the C-suite and you can get a decision made almost immediately. Yeah. Enterprises procurement's going to take most likely 12 to 18 months to win those clients, particularly for this type of tool. So I think that's obviously the next step, right? We validate PMF, show that it works effectively. We can show them that there's new traction from users. Then we start to work on the enterprise clients. So I think that's going to be an interesting challenge to prepare for in the next sort of 12 months.
Well, in the end, the challenge is always, if you have people, I mean, from being from the industry, if you have the applicants, it's always easy to get the employers on board because they just want to have good people.
Good talent.
Well, what does your sales team look like when it comes to closing the enterprise?
Yeah, I think for any early stage startup, the founders should be involved in the sales. I think employers want to see it. So I'm actively involved. I was in the recruitment space myself for many years. And I've been an entrepreneur for quite a few as well. So myself and Johnny both are actively at the coalface, and our growth lead as well, Carl. So there's 3 people that are facing customers on a daily basis.
Nice. And how much have you invested yourself in this business?
I put in a $25,000 check last summer to basically bootstrap the company. And then in total, we've raised about 120,000 US to date.
Right. And is there more rounds planned on the way up, or will this suffice for forever?
Yeah, for sure. We would have to raise additional capital as we scale globally. There's obviously players in the US, which is a very hot market and the largest recruitment market in the world. And there's obviously emerging players in Europe as well, like Jack and Jill in the UK doing some cool stuff. So yeah, we would definitely need to raise further capital. I would want to bring in strategic investors from the recruitment sector. I've already met people like Stephen Bartlett, if you follow Dive, the podcast CEO. So I met Stephen in Hong Kong last year. So people like him, James Kahn, like the major leaders in this space, I want to get them on the cap table, but they wouldn't come in until probably Series A and beyond. The other ones is I spoke to Seek Investments, which owns JobsDB and JobStreet. They were interested in the business, but it would have to be at a Series A and beyond. So I'm sure after the seed, we would do a Series A. I do own a non-dilutive financing company, as I mentioned. So there would be the option of accessing some non-dilutive capital from that. But obviously, we would want to do that only if needed.
Right. And what targets is it you need to hit, do you think, to be able to do the Series A?
Yeah, obviously, if we want to try and get as much of this in place, so we want to make sure that we scale revenue effectively. The target is by the end of next year to be able to get to about 8 million or so in revenue. So that's obviously an ambitious target. But by that point, if we're getting close to those numbers, we'd be looking to do a Series A at that point.
Right. What do you see the long-term profit margin being for the business?
Very good question. I think at the moment we're pricing it at 500 US per month for the SaaS bundle, which gives us a lifetime value of a client of around, I think it was 3 years we forecasted, so about $18,000 per client. So the truth is, with these tools, we can keep the costs pretty low. But honestly, we're probably still working what that's going to look like, because at the moment we're starting with these SME clients. It might change when we go up to the enterprise value chain.
Right. And of course, you'll see how it looks with cost per acquisition and everything to see what will the margin actually sit at.
Yeah.
So, sorry, I'm blanking on my question. I had one though.
No worries. I've already added you on LinkedIn, so we can also connect afterwards.
Yeah, no, I'm excited. I'll be excited to hear the journey and see where you end up, because it sounds like you got a pretty cool tool and a good pathway.
Thank you.
Cool. All right, Mess. I've asked all I can remember. I have a question. I just don't remember what it is. Sorry for it, Mark.
You can always ask later. Let me move to our last, but of course not the least, founders. Sorry. This Nuno, CEO and founder of Fair Control, headquarters Delaware, US, Event Tech, seed of $500,000 in USD. How's it going, Diaz?
Hey, how you doing?
Thank you so much for coming. Please give an intro to yourself, and after you can go straight to pitch.
Will do. Hey, everybody. My name is Diaz. I'm currently a product manager at Capital One, and I'm currently the CEO of Fair Controls. We help match event attendees to the right events and people using AI. There we go. Everybody see my screen? Let me know.
Let's go.
Okay. All right. So everybody, we are Fair Controls, and we help match event attendees to the right companies and sessions using AI. So I don't know anybody in this call, but I'm very confident that at least one of you has probably been to an event. And if you have, it can be very chaotic. When there's multiple sessions on multiple companies, it can be a struggle to determine which one you want to go to first, which one's the right fit for you. So our platform, our solution to that problem is saying, hey, tell us what your goals are for this event, what you want to achieve, what you want to get out of it. And we will recommend you sessions, speakers, companies that align with your goals and your interests. And we make it very seamless to where you get to see exactly what sessions you should attend, what people you should speak to. And we take it a step further as well and tell you where you can stay to stand out and actually get good attention. So that's a link to the platform there. I wanted to show a visual, but wasn't able to attach it. But if you go on our platform, you see that it's very seamless. You go on there, you answer a few quick questions like what industry are you interested in? What are you hoping to get out of the event? What are your interests? And then after you answer about 7 questions, we start to take all of the companies, all of the sessions, all of the agenda that is already planned out for an event. And we recommend you ones based on your interests so that you know where to go and that you have a better experience overall there. So the event tech space is actually fairly huge, and it's only been growing. Did some research myself and saw the event software market was projected to reach over 17 billion by 2030, and it's currently 9.3 billion. And in the US, there's over 100K events, I would say, annually, just counting for career fairs at colleges, conferences, summits, expos. So when you take all of that into consideration, you see that there is a market for this, and people spend a lot of money on these technology. And I think in terms of what we can actually get in this market, we are targeting, I would probably say, that 10 million annual recurring revenue portion there, just getting a small chunk of that market there, assuming that we get like 5K in terms of per event, we would charge the organizers 5K. And then the SAM, target North America, I would say predominantly, especially events where there's a lot of engagement, a lot of sessions. I think that's where the real power for our platform will come out. And then TAM, that would be more so global. So any place there's an event in the world, that would be the hyper target audience we want to achieve. And I would say the strategic thing here is the data portion. The fact that we're capturing all these different types of intent from these event goers. I think on the organizer side, there's going to be interest there. And I think also on the attendee side, as you start to develop a pattern, it will be easier to actually address these different markets because people want similar things like finding a job. So currently for Fair Controls, in terms of our go-to-market strategy, how we've been able to get users so far is just looking at organizer sites like Afrotech, Black in Tech, those big conferences, and putting them on our platform. And then we would just look at their platform and web scrape the events and the companies. And then after doing that, we'll market like, hey, we have everything that this organizer has on their site. Come and using our AI platform. So you kind of got to get a personalized view, a personalized list, especially if you know you've been to an event. Sometimes organizers don't have everything on their site, on their platform, or their app, or whatever they're using, and it can make it hard for people to actually navigate there. So we kind of alleviate that pain point as well by doing this. So we've been able to just get people randomly when we say, hey, we've uploaded an event for this organizer, go check it out. And then people will come naturally. It's all been organic and mostly LinkedIn posts. So how it goes, we'll launch those event pages. People will come on there, and then they'll start actually inputting their information. So as I said to my previous plan, we actually did this for Afrotech and Nesby, this plan I highlighted previously before, and we actually able to gain a good bit of traction with absolutely zero spending cost. So this kind of showed me that people are interested in this, and also they are willing to actually come to our platform versus an organizer site. And these are some quotes I got from people who use our platform. I was very shocked by how impactful it was to people's lives, because when I first released it, I didn't think much of it, but it's kind of like showed me, hey, there's something here and that this is a real pain point that people go through. And our business model, I would say, is mainly B2B, especially the data portion. I think overall, we're just trying to see how can we leverage this data and get it to organizers to where they can smoothly run their events, but then also give their attendees the best possible experience. So whether it be a subscription, marketing channel, I think I can help them in that regard. And we're asking for 500K for 10%, evaluating our startup at like 5 million, just considering where we're at right now. But that concludes my presentation.
Thank you so much, Diaz. Daniel.
All right. Yeah, I like it. I mean, I'm in the event industry, so this is obviously something that I'm interested in. How does this work on virtual events?
So for virtual events, it's still the same thing, because they still have companies, they still have sessions. So we just go to the virtual event, we look at what they have, and then we just integrate that into our platform. And it'll be the same use case where people can go on there and use AI. And we even have a white label option as well, where they can actually input it into their thing as an iframe. So that will not take people off their site. So that's also another option as well.
Yeah, that was going to be my next question, is so you can integrate it into, so it becomes a part of the event onboarding, essentially.
Yeah, exactly.
Right. And so how about for, obviously different events are hugely different in sizes. Are you pricing per attendee? Is it a fixed cost per event? What's the idea there?
Yeah, I think it will be dynamic in a sense, like to your point, different attendee sizes will be a big factor here in terms of the AI, because the AI is not free. We're currently using a platform called Lovable, so we're kind of anchored to their AI modeling system, and it's not too expensive, but the costs do add up. So we probably charge based on that attendee size, and then also just accounting for things like if people want custom things, like people want branding, they want theming, they may want a different view on the analytics. So all those custom requests as well probably factor into.
Right. What do you see are your biggest competitors right now?
So I did some research. I saw VFairs. They're like a virtual kind of event space. And I think they also mainly focus on the event workflow aspect of things. There was also Hobson. There's LinkedIn events, Indeed events. There's actually a lot of competition out there, but in terms of direct competitors in this space, I would say it's very niche. There's not really a lot of people in the event space. And I think our main value prop is just the fact that we're more so focused on giving the event attendees the best possible experience while also providing the organizers that information so that, you know, they can take it and apply it to their future events. So we're kind of niche in the niche. So
yeah, I like what you're doing. We do, for our events, we give people the options to go through different quizzes to get kind of, hey, these are the sessions you can't miss. These are the speakers you got to go to. But it's still, you know, it's a quiz model, and it's not, you know, it's not a perfectly seamless way of doing it. So how does the user experience differ here? Like how is the experience for them?
So I don't know what technology is behind yours, but I would say the biggest.
It's just an if and, like, it's literally, you know, they'll go through the quiz, and based on that, they come to a different end landing page saying, oh, based on your answers, this is so it's a whole lot of personalized building.
Got it. So for me, when I first did this, so I started at Afrotech. So what I did was I kind of created personas based on people who I know go to Afrotech, like students, full-time workers, did the research there, and I kind of fed that into the AI to create these kind of like personas to what people would want and companies they should speak to. So the AI kind of took that, and then already using the AI that Lovable has there, it takes all of that and gives them the best possible options there to where it's not just, like you said, an if and and. Yeah. So I think it's universal in that approach. And then also as it scales, you'll have so much data based off people, because everybody's not going to be different, right? Like a lot of people are going there for common goals. So you start to develop, an LLM that's very niche to where it can start to get better over time. So that would be like the real power there. As it continues, it's just going to get better at that decision making.
Right. What is the AI, like the AI LLM you're using at the core?
So I believe Lovable is using Anthropic. I can't even say the name right. Anthropic's AI, I believe. The AI gateway. So they're kind of the middleman there. And one of my actual requests in the funding deck was that I want us to move off of Lovable, just not be dependent on them, and really create our own model. Because I think we could kind of be a vertical in this event space with this data and then apply it universally across the board. So that would be like one of my biggest priorities there. We got that.
Very cool. How big is the team currently?
Currently it's 2 of us. So me and then my other co-founder, he's also a Capital One. He's kind of like leading the partnership strategy. And then we've partnered with this event, kind of like what you do is similar. They're called Big Stage Energy. They have partnerships with a lot of event figures. And we have a meeting actually this Saturday. We're going to be presenting and trying to get some official partnerships, because I think distribution will be what we live or die by. So that's like my main thing there, to try to get those partnerships ASAP.
Right. Yeah, that sounds interesting. I mean, that's one of the big challenges, I think, breaking into the industry. I'm a part of a few different like event organizer masterminds, and most of them are pretty stuck in their ways, and this is how we've always done things. So I can imagine getting in through those doors is going to be the challenge.
Yeah.
So what is your exit? Where is it you want to take this company?
I would say for me, I can definitely see us being acquired by like a Handshake or something like that. I think holistically, if companies really locked in and try their best, they could probably implement something like this in terms of the AI, the recommended system. But why would they need to do it if we already have it? So that's like my thinking there. If we can kind of create a niche in this space and then, you know, go to those events that people have the most pain at in terms of decision making, we can start to make a name for ourselves and then easily just get acquired that way. And even with our platform, beyond just that, We also have reviews. You can look at reviews at companies, what they did there. You can browse and see different companies. So there's different pain points within our site that we address, but our main one is that matching aspect.
Yeah, I think a challenge is going to be the CRM systems. As soon as they see this, they're going to be able to very quickly start looking at integrating it directly in a Go High Level or a Keep or one of these major systems. How do you think you can stay ahead of them in that development?
I think speed is really our biggest advantage, speed. And I think once you do establish those partnerships, people typically don't like change, up to your point. So I think if we do get people on board, we'll be able to move faster than other companies will be able to, because the hard part with a lot of these companies is being able to integrate AI with their current systems. So we don't have that problem because we're not like a big corporation. We can kind of move fast in that regard, since this is like our only new system there. So I think that's our biggest advantage right now.
How do you see scaling the team? Like with this money, if it comes in, how does that grow your team?
I would say for me, I would like more people who are experts in the event space to really get their input. I want to have a direct feedback loop to where I'm constantly getting feedback on what event organizers want. So like to your point, we're not just a feature, we become a platform where events are coming to us to get maybe publicity to their event or maybe getting data that they would need. So I think that would be a big selling point there.
Right, putting together basically an advisory board of event organizers around the world.
Exactly, yeah. We already have one person that's looking to join our advisory board. I'm at like 1%, so I want to kind of like grow that out, grow the network there.
Very cool. Very cool. Yeah, I think there is a lot of potential. I mean, honestly, we should have a conversation off the call to see what we could do. What do you see your exit valuation being?
Exit valuation? I would say for where we're at right now, I'm going to say like 10 million for where we could possibly get to in a realistic time frame. The market is very big, and I think this is something that any event can really apply to, but I would like to really see how far this can get just based off that concept of matching and then having that data and then sharing it out to people. I think this could be a big win, especially with pain points like career fairs. I think there's been a running gag that you don't really ever get what you want out of a career fair, and that's been a recurring thing. So even outside of just events in general, there are problems that we're addressing that I think are very powerful.
Right. And what would you say the difference will be for you if you get this money versus just bootstrapping it?
I think if we get this money, I feel like we'll be able to move more efficiently because we've been able to make updates very seamlessly with Lovable and stuff. It's very impressive, like how fast you can get stuff out. But it's making sure we're actually making the right things, and you don't know if you're doing the right things unless you know your customer. And our customer are the event attendees, which we speak to, but the event organizers, I feel like, are the most important part. So creating that loop there, I think that would be the biggest thing. And then being able to market and everything will really help there.
Yeah. Nice. Very cool. Mas, that was all the questions I have that are relevant for investors. I could go on as a event organizer, but that's not interesting for anyone but me.
Thank you so much, Daniel. Thank you, Des. Stay there, yes, because we're bringing all our 3 founders back. Actually, 4 overall. I don't know if we are all in, but let me start with Daniel. Daniel, if you want to, in 10, 20 seconds, convince Daniel Wood, and not yourself, to invest in your company, what would you like to say in 20 minutes, 20 seconds?
Well, I would like to invite anyone that wants to help Blend Energy on the big mission to tackle plastic waste and also make a big return on the way, to join us. We have a track record. We're serious. We're in this for the long run. And if you're serious, we're happy to work together and push this forward. Humanity needs this. Thank you.
Thank you so much, Daniel. Mark.
Hi, so Preferred is an AI-powered platform revolutionizing recruitment through incentivized referrals. I'm a serial entrepreneur. I've exited before, and I'm in talks to exit for a second time. It's hard to scale businesses and exit them. And if you invest with us, that's something that you have a good chance of succeeding with.
Thank you so much, Mark. Miranda, I think, is not with us, but she has some problem with the connection. Diaz, the closing is yours.
Awesome, no pressure. I would say as a person in the event space, you understand that this is a problem. And I think we also understand that with AI, there's a massive opportunity to address this problem holistically. the event space has been relatively untouched for years, and I think there's a chance for our platform to be the thing that makes a big change here and make a lot of money. So I would say that's my closing remark there.
Thank you so much for your closing remark. Daniel, if you want to, I don't know if you have any recommendation to give to our funders before we want to close.
No, I appreciated all of their answers, all of their honesty, and it sounds like you found 4 very good potential businesses. So I'm excited to see how they continue to develop. I've connected with all of you on LinkedIn, so I'm sure I'll be able to follow your journeys.
Thank you so much, Daniel. Very much thank you for spending your time with us today. So we are leaving, but everyone wants to come to pitch to EquityMatch. Just email to pitch@equitymatch.co, as you can see down the banner, and we are more than happy to welcome you. Again, we don't charge absolutely anything, and all the funds you are getting through this event are all yours, and nothing is shared with us. Thank you so much. I see you next time, and thanks you, Mark, Daniel Diaz, and Daniel Wood, to be with us. Thank you.